Hello and welcome to this Better Business Bureau webinar, Building Trust in Trying Times. Today, it is all about the SBA, PPP, and EIDL loan programs, specifically an update on where we stand with those, as now round 2 of funding has taken place at the recording of this. And the SBA has run into some challenges, according to the news, as of late on processing the rush of applications that have hit. Plus, we'll talk about the importance of record keeping. So that you are able, as a business owner, able to turn that loan into a grant. We're also working to make this webinar as interactive as possible. We have a poll that we're going to ask a question right now as we do a little bit of housekeeping and prepare to introduce today's speaker. We're going to ask you what your status is if you've applied for one of the PPP or EIDL loans. That is up on the polling questions up on the screen right now. If you would go ahead and answer that question, we would really appreciate it. We're going to be also taking questions for our presenter at the end of this webinar. So if you have a question or a question comes up that you're looking for clarification, please look for that Q&A box at the lower end of your Zoom screen. Use that to submit questions. It makes it really easy so that we're able to go through and methodically answer the questions throughout the course at the end of this webinar. Terry Frisk is our guest today, back for a second time for a webinar because of how popular he was and the valuable information that he gave us during that first webinar almost a month ago now, Terry. Hard to believe, but Terry has more than 25 years of business experience as a general manager, controller, and chief financial officer. He is a CPA whose career has been focused on small to medium-sized privately held companies. His extensive background and experience have given him the skills to assist in many different aspects of the business's financial needs. Also, he has helped companies manage growth, forecast cash flow, increase margins, reduce employee benefit costs without compromising key components, improving their banking relationships, and obtaining favorable pricing and terms from vendors. All of those things, very, very important, especially during these times. He is an expert at strategic and long-term planning, tax planning and projections, budgeting and forecasting, systems implementation, staff training and development. Terry, thank you so much for joining us today. We really appreciate it. And we'll start off. You can see where folks are at. About 51% of our respondents have applied and have received funding. About 33% have applied but have not received funding, and about 16% have not applied. And actually, we do have some great information coming up in today's webinar for those that have not applied and might be looking for some other options. So, Terry, what's the latest as far as the information and news that you're tracking when it comes to SBA, the PPP, and the EIDL loans?
Well, thanks for having me back, Dale. First off, and I want to welcome everyone to this session. The latest in the PPP loans is they've restarted accepting applications with the SBA on Monday, but it's been a rocky start. The system crashed early on because of the sheer volume. A lot of the banks had applications in the queue, and so they were, madly putting in the applications, and it just overwhelmed the system, and so they've had problems getting going on this second round, but they overcame the same type of problems first round, so I anticipate it'll get started back up. I haven't seen any numbers yet on those types of on the applications on the second round. So now, I want to start with a recap of the PPP program. The SBA started taking applications initially on April 3rd and approved a total of 1,661,000 loans. Let's see. Make sure I'm there. As the table shows, it was an unbelievable amount of volume. And while there's been a lot of media attention on the 4% of the loans, over $1 million that consumed 45% of the dollars, there were almost 1.6 million loans under $1 million with an overall average loan size of 206,000. So doing the math, that would translate into an average monthly payroll of about 82,000. And so with the average monthly wage in the U.S. about $4,000, the average business size for the loans granted is around 20 employees. So it's largely achieved what Congress has set out to do, is to assist the smaller businesses. While there's been a number that of large businesses that went through, a large percentage of the dollars has gone to the small businesses. And with the second round coming up, hopefully we can get another 30 or 40% funded, because as the poll indicated, about 3/4 of the small businesses submitted an application, but only 20% were funded. And looking at the results from this group of 51% received funding, you're well ahead of the curve. But and if you've got your application in, I recommend you be persistent with your banker to push the application through. Be the squeaky wheel, and be in touch, be in contact with them to usher that application through the process to make sure you get funding in this second round. But if you're not successful in securing a PPP loan, there are other relief options available. I mean, first, you can apply for an SBA 7A loan, which, like a PPP loan, is available through your bank, but the terms aren't quite as favorable as for a PPP loan. But you can borrow with a 10-year payment term and approximately 4% interest rate, depending upon the what the bank is charging. Next, there's the employee retention tax credit that allows employers to take a 50% credit on wages that are paid between March 12th, 2020 and January 1, 2021. So to qualify, the business must either suspend operations due to a governmental order, or experience a 50% decline in revenues from the corresponding quarter of the prior year. So in some cases, this may be even more advantageous than a PPP loan, because it could amount to more, because you're comparing, you're getting credit for essentially 2.5 months worth of payroll under a PPP loan, whereas in this in the employee retention tax credit, you'll get a 50% credit for payroll over 9.5 months, conceivably. Then businesses can defer payment of the employer portion of Social Security taxes between March 12th and January 1st, 2021. This will keep 6.2% of your gross payroll in your pocket, until it's due, which is in 2 installments, 50% due December 31st, 21, and 50% due December 31st of 22. So if you have, say, $1 million payroll, you could keep $62,000, not have to make that payroll tax deposit, and then it'd be an interest-free loan that's payable over 2 years. And if you have a PPP loan, you can still defer up to the time the loan is forgiven. So you can take advantage of that now, even if you have a PPP loan, up until the time it's forgiven. Now, there's a myriad of state and local assistance programs that may be available to you. The best source of information I found is on the Intuit QuickBooks website. And Jason, if you can post the link to the website, go to that website and it'll list a number of programs available, not only nationally, but in your particular state. Also, there's a number of private funding programs listed on the QuickBooks site. So check out these options. Some may be viable for you. Now, for those of you who have received the PPP funding, I want to talk about next steps. So before you blow through all the cash, you should consider how the funds are going to be spent to be in compliance with the program requirements. Now, in the interim final rule that was issued on April 2nd, the SBA stated at least 75% of the PPP loan proceeds shall be used for payroll costs. Then they want further to say, this limitation on use of the loan funds will help ensure that the finite appropriations available for these loans are directed toward payroll protection, as each loan that is issued depletes the appropriation regardless of whether portions of the loan are later forgiven. Now, there's been a lot of confusion on this topic because a lot of the attention is focused on the forgiveness piece, and this is actually written into the section of the rules that apply to the forgiveness. So I think it's created quite a bit of confusion, although the wording seems pretty clear that 75% of the loan amount is to be spent on payroll. Now, to date, the SBA has been issuing guidance on loan eligibility and has not provided a lot of guidance on administration. So they may come back and state that the 75% relates only to the forgiveness piece, and that the June 30th measurement date relates only to the headcount and wage rules that I'll cover here in a minute. But I don't believe you'll be able to use the proceeds for other purposes in anticipation of converting to a 2-year low interest loan. I mean, this is underscores the importance of planning and how the proceeds will be used, and especially if you're in a business that can't reopen until June or later, you know, we're just going to have to see what kind of guidance the SBA provides on this application. So looking next at the forgiveness rules, you know, the guidelines are clear that no more than 25% of the forgivable amount can be used for non-payroll expenses, which includes rent, interest, mortgage that has been in place as of February 15th, and utilities. So if you're able to spend 75% of the total loan amount on payroll costs and 25% on eligible costs during the 8-week period, then the full amount of loan may be forgiven. However, the forgiveness will be reduced if the number of full-time equivalents during the 8-week period is less than the base period. Now, the base period is your choice between February 15th of 2019 through June 30th of 2019, or January 1st of 2020 and February 29th of 2020. So what you need to do is calculate the number of FTEs for both periods and select the lower period. Now, the guidance hasn't yet been issued that defines the FTE, but other governmental rules generally define it as 30 hours per week. So you take the number of employees, divide it by 30, although you got to throw out the hours that employees have above 30 in order to calculate the number of FTEs. But this will provide you a basis for planning how many FTEs you will need to employ during the 8-week period. Now, there's a safe harbor rule that this deficiency can be cured by restoring the number of FTEs by June 30th. So theoretically, I mean, the way this is written, you could actually hire the employees back on June 30th and then turn around and lay them back off July 1st and meet this rule. I don't think that's what the SBA's intent is. So, you know, I look for them to issue further guidance on this in the coming weeks. The next is the individual employee rule, which states that forgiveness will be reduced if wages for individual employees during the 8-week period are more than 25% below the amount for that employee for the previous quarter. So it's on an employee by employee basis. You got to look at the individual employees but you throw out the employees that are over 100,000. You don't have to consider those. The problem is this is going to require a little more guidance on how to compare wages for the 8-week period to the amount during the quarter, which is actually 13 weeks. I mean, the SBA has not issued any guidance on that yet. But there is also the ability to cure any deficiency by restoring the reduction in wages to the February 15th level by June 30th. Again, much like the headcount rule. But as Darren Leon pointed out in his presentation last Thursday, I mean, the 75% payroll cost rule will likely make the wage and headcount rule irrelevant, because you're going to need to bring back all the employees and reach full employment to achieve that level of the 75%. So plan accordingly. Put together a plan, calculate out where you need to be, and see how that fits with your ability to bring these employees back. Okay, next I want to look at the forgiveness rules. You will need to apply to the bank at the end of, after the end of June. And so the bank is going to want to determine, to substantiate the calculations you made in how the PPP funds were spent. So I recommend keeping the PPP funds segregated in a separate bank account and issue funds from this account only for eligible expenses. And this provides discipline over the use of the funds, plus maintains a running balance on how much funds are remaining. Now, the process I've set up for my clients is to create a spreadsheet that details the expenses, both payroll costs and other eligible expenses, and update it on a weekly basis. And of course, attending a webinar put on by a CPA, you knew you were going to see a spreadsheet at some point. So here it is. I promise this is the only spreadsheet, but as you can see, I've laid it out with the rows for the individual qualifying expenses and columns that segregated out between payroll and other eligible expenses. And then note at the bottom, I keep it running.
Gary, I'm going to interrupt real quick because we cannot see the spreadsheet that you're showing. So.
Yep. One more click.
There we go. Thank you.
Thanks, Dale. Sorry. So backing up, as you can see, I've listed out the expenses on the left, and then have separate columns for payroll costs and other eligible costs. Maintain this on a weekly basis, or whatever basis fits your business. Maybe on a payroll cycle would be easier. And then you come down to the bottom and you calculates a running total of the amount of remaining PPP funds you have available. And then you can use this total if you're paying expenses out of your regular bank account. You can use this total to transfer funds from your PPP account to the operating account. So you have documentation of how the funds, the amounts were calculated and how they were applied. Also, I recommend scanning copies of the expense documents, like your payroll register totals and eligible expense bills, and saving them to a folder so that you'll have all the necessary documentation when it comes time to apply for forgiveness. Okay, now I want to shift gears a little bit. I want to shift gears a little bit and talk a little about reopening your business. Some businesses were able to continue to operate through the shelter-in-place orders, while others had completely shut down. Now, as states are starting to ease up on restrictions, you need to be planning your strategy on how you're going to reopen your business. So first, start planning on how you're going to return employees back to work. Obviously, you're going to want to be working toward that 75% rule, but also what it's going to take to bring them back. Because bear in mind, if they've been off and drawing unemployment, the supplemental unemployment amount is $600 in addition to their regular weekly unemployment amount. So they could conceivably be making more than what they were making while they were at work. So you may need to look for replacements. Also consider whether you should have them tested before returning to work and what steps you're going to take to ensure that they will not get infected on the job. Locally, there's a medical facility that's doing return to work testing. So if there's those types of resources available, consider that, because you're going to want to be able to advertise that, yes, our employees have been tested, they're cleaned, and so it's a safe environment for customers to return. Also, evaluate what changes need to be made to the workplace to meet any continuing regulations and ensure safety to both employees and customers. So what needs to be done? If you're in a restaurant, you need to segregate tables, move them a little further apart, or if you're in some like retail operation, if there needs to be a shield in front of cashiers, those type of changes that need to be made to the workplace to make it safe for both customers and employees. Anticipate changes in customer behavior. Customers may be skittish at first, or if you're a B2B business, your customer may not reopen when you are ready. So also be aware of any remaining restrictions on the way your business operates. Each individual state and locality are going to have individual regs on reopening the business. So be cognizant of those and plan accordingly. Similarly with your vendors, be aware of their reopening plans and how that will impact your business. They may not even reopen, so you may need to find an alternative source for their product or service. And it's a good time to revisit your business model. Your business landscape may have changed dramatically, so you need to pivot in order to remain relevant in this post-coronavirus world. And then finally, have a contingency plan in the event there is a second wave of infections that results in reestablishing the shelter-in-place rules. So, in summary, plan use of the PP funds to maximize the potential forgiveness. Watch for additional guidelines from the SBA and adjust your plans accordingly. Use documentation techniques to use the PPP funds. Check into other assistance programs. Check out the Intuit site or even Google other types of resources that may be available to you. Work on developing a reopening plan. And finally, take care and stay healthy. So with that, Dale, I'm open for questions.
Absolutely. And we have the questions starting to stack up. So we're going to dive right in, Terry. And the first question, when we signed up to get the SBA PPP funds, they only figured our payroll times 2.5. That doesn't leave much for expenses. Is there something we can do to get more funds to help?
Well, the initial calculation was 2.5 times your monthly average wages. So it's essentially equals 2.5 months. But the measurement period for forgiveness is going to be 8 weeks. So, if I'm interpreting your question correctly, you're looking for other additional funds beyond, or resources beyond the end of the PPP program. And like I say, check out the Intuit site. Also, SBA 7A loans are still going to be available for working capital needs, albeit they can't be turned into a grant, but they are available for working capital with pretty pretty generous terms.
Okay. Next question. I'm in the care management service to elders business. With the governor's plan to reopen gradually and care facilities projected not to reopen to visitors, non-essential until mid-June, do you have suggestions for keeping my billable hours steady?
That's going to be tough in some of those industries. Things you can do would be training for employees, providing any additional training, any additional tasks that they may be able to do. But in terms of billable, I don't know if any of that could be billable. You're in a tough situation, and pivot to what you can do in terms of working with your current clients and trying to keep the billable hours up.
Okay. Next question. We received our PPP loan in the middle of the pay period. Can we use it for all of this pay period, or do we need to wait until the next pay period?
Yeah, that's a standard question. I think as the SBA is going to have to provide additional guidance on, because the term they use are cost paid or cost paid and incurred. So that could be either both on the cash basis, so when it's paid plus when it's incurred, or it could be when paid or when it's incurred. So we're looking for additional guidance from the SBA on this question, which hopefully will come in the next few weeks. The way I've been treating it for my clients is if it were paid within that 8 weeks, then it counts toward the forgiveness.
Okay. Next question. Can we use the PPP for the expense, gas mileage, phone, and internet for the owner of our company?
Yes. Yes. I mean, they're valid expenses for the company. So if the company's been paying these expenses, they could continue to pay them. And that brings up an interesting question in terms of the SBA's defined utilities. One item's transportation, and I'm assuming that is gasoline for operating the vehicles.
Okay. If I only have 75% of FTEs, full-time equivalent, as compared to last year, does that mean I will get 75% forgiveness of the PPP loan?
Well, we're looking for, again, we're looking for additional guidance on that. I mean, there is the one safe harbor in that if the number of employees at the headcount is brought back up to the full amount as of, compared to the February 15th date by June 30th, then that the headcount rule does not apply. But again, we're looking for more guidance because as it's written, you only have to bring that FTE count up for 1 day. And I doubt that that's going to continue. I mean, I doubt that that's going to be the determining rule.
Okay. The next question comes from Kim. regarding an S corp, for owner's salary, what is the maximum they can receive if the normal annualized wage is under 100,000? Is it 75% of first quarter wages or some percentage of 2019 wages? What if the person received a raise in January of 2020?
Well, if you submitted your application based on 2019 and the owner, I'm assuming the owner is on the payroll. If the owner is not on the payroll, then they're treated as an independent contractor. At least that's the way I'm interpreting the rules. There's the rules in the Internal Revenue Code that talk about guaranteed payments to owners in LLCs and S corps, and those are really treated as a distribution, although it's not been clear as to whether they're going to be included, because they're payments for services. So if the owner is on the payroll, it will still count toward the loan application amount and the forgiveness amount. But if the owner is receiving guaranteed payments, which would indicate that they're an independent contractor, then my interpretation is no, those amounts will not count.
Okay. If my utility costs are less than 25% of the loan, can I use payroll as more than 75% of the loan money?
Yes. Yes, it's just that those utility and rent costs cannot exceed 25%, but they can certainly be less. So if your payroll exceeds the 75%, then you're golden. You're good to go.
Okay. This is outside of our area, especially from a CPA perspective. And we might be able to answer this better on a webinar tomorrow about reopening a business. But Alina asks, does a medium risk company have to provide PPE equipment to the employee?
Yeah, that's really outside
That's outside of ours. So I'm going to ask Alina and anybody else who wants, we're going to focus on reopening a business tomorrow. And this will be one of those questions that we should have a lot better read on tomorrow without the expertise present. So Alina also asks, we're an essential company and my employees are refusing to go on jobs or come back to work. What should we do? We did receive the PPP money.
Some of that's going to depend upon what your state's unemployment rules are. If you recall them and they don't come back, then they won't be eligible for unemployment going forward. At least that's the rule in this state. Now, what complicates that is whether they're stating that they don't feel safe coming back. It's too early to come back, and that's what really complicates it. Now, in terms of measurement for the PPP, you can go out and replace them. You can hire additional employees in their place, and it's my belief that you can substitute them in some of these other measurements. So if you're looking to measure the head count or the wage count, you'll be able to substitute new employees for employees who did not come back.
Okay. Helene asks, S-Corp shareholders get wages and distributions. Are they allowed both from PPP or only actual W-2 wages?
Only W-2 wages. I mean, if they're distributions, then they're not income. And like I mentioned before, there's this rule about guaranteed payments. That's kind of a hybrid between wages and distributions, and it's my interpretation. And again, I think there'll be more guidance on this, but I believe they're going to be treated as distributions and not eligible cost.
Please explain the $10,000 EIDL received after the PPP loan was received. Can they simply reduce the PPP loan by $10,000? never use that portion of funds and pay it back to not have to lose forgiveness on $10,000. Did
I believe that it is calculated in the end. It's when at the time of forgiveness, the 10,000 is applied at that point. Because there's not that conduit between the disbursement of the idle loans and the PPP loans, because the idle loans are administered by the SBA and the PPP are administered by your local bank.
Are equipment loans, are equipment leases included as rent?
They could be. They could be. I think Darren mentioned Thursday talking about a copier as being potentially a utility item. So it kind of depends upon what the equipment is. I mean, the code itself really talks about the rent being for the occupancy for the building, but
Okay.
the equipment could be classified as a potential utility item.
Please clarify the transportation utility. Any contractor with trucks needing fuel, do these job-specific trucks qualify even if they just stop by a local BP to purchase the fuel?
Yes, the fuel counts.
Fuel
That's
counts.
that's my interpretation, because it's energy. It's like natural gas and electricity. So it's my interpretation is it counts as the utility cost.
Can they still pay and have forgiven interest paid on non-mortgage debts in place of 215?
And no, it has to be mortgage debt. At least that's the current consensus.
Okay. If I have to fly to different job sites, would this be covered under the transportation and be forgivable?
That's great. I would wait for a different guidance on that if it comes out. I mean, if there's no specific guidance that comes out on transportation to job sites, it's certainly a gray area that I would include in documenting your application for forgiveness. So, I mean, worst that can happen is they would throw it out. But for most intents and purposes, the utilities, the standard utilities plus rent will typically use that 25%. So you really have to be stretching to have to include other ancillary items.
Business couldn't afford to pay the March rent and utilities or the owner's payroll. Can they use the PPP funds to pay those expenses they were unable to pay until they got the funds?
Well, again, it's payments made. So if the payment was made within the 8-week period after the funds were dispersed, currently it appears that would count, even though it's for a earlier period. But again, there needs to be more guidance on what the intent is in that statement.
So, Terry, because the information on this is coming out so rapidly, is the SBA keeping its website updated with new interpretations of these rules? Is there a place that
Yes.
that people should be looking?
Yes, if you go to the SBA website, let's see if I have it here. It's the home.treasury.gov policy-issues cares assistance for small businesses. And the program rules are
Oh, you can see where they're updated.
Yes.
Perfect. So,
In fact, I see a new one issued today, the interim final rule on seasonal employers.
okay. So this is a great place to go. And then we will also get the link for that webpage and put it in the chat section of chat. So Helene and Alina have been asking some amazing questions. We want to give some other folks an opportunity to get some questions in. So I'm going to skip down to let's see, if you have already received a PPP loan, is the employee retention credit also available, or is it an either or?
It's an either or.
Okay.
You can apply for the employee retention if you have a PPP loan. Now, the other one, the Social Security deferral, you can defer the employer portion of Social Security until the time of forgiveness of the PPP loan.
Let's see, will there be an application form for the forgiveness of loan, or will that be up to the lender?
That'll be up to the lender. And I believe that SBA is coming up with a kind of a standardized form, but it's really going to be up to the lender what additional requirements they're going to have in terms of documentation and application.
Okay, I'm going to answer this one really quick because it's come up in past webinars. Marianne asks, are copier leases considered a utility expense? Both Terry has answered that, and Darren on our last webinar answered that as a yes. What happens if the services do not start until after July 1st, 2020? How do I spend money on payroll if the work is not available for the employee?
Unfortunately, the PPP cuts off on June 30th. And unless there are modifications made, you're kind of out of luck. Now, that said, there's a high possibility that the rules might be modified to extend some of these dates. Like I said, a lot of businesses are 2 weeks into the 8-week period, and the SBA really hasn't issued a lot of guidelines on the actual administration. So I think the SBA is going to be a little more lenient in issuing guidelines, and there may be extensions of dates in the future. We just don't know yet.
Terry, would you be willing to share that Excel spreadsheet that you shared as an example on how to document expenses?
Yes.
Would you be willing for us to send that file via email to our participants?
Oh, absolutely.
Okay, that'd be fantastic. So that was one of the questions from Trina. What are considered transportation costs?
Like I said, I think it's going to be fuel, those types of things. Like it's energy related. You think of a utility as electricity, natural gas. So it's going to be the fuel, the gasoline or other fuel for vehicles.
Okay. We operate a moving company. Can fuel for our trucks be used under the utilities loan money?
Yes.
And can you confirm telephone, water, sewer, and trash are included in the allowed utility expenses? It was our understanding they were not. So this is another one of those areas where there is some confusion.
Yes. I mean, they're all public utilities, so yes, they would be considered under the other eligible expenses.
Okay. Scott Cameron is asking, how do we apply for an SBA idle loan?
Well, currently the SBA is not taking any further idle loans. Their backlog is too long at this point, so they're not taking any additional idle loans at this point. That may reopen in the future.
Leanne asks, what about pay frequencies that exceed the 8 weeks, biweekly, monthly? as an example, a start date due to PPP funding may limit 2-month reporting. Semi-monthly receive funding on the 4th, the 5th payroll already processed, only able to process 3 payrolls versus 4 before the 8th week deadline.
Yeah, that's going to be some of the complexities that the SBA is going to have to address in terms of their how they apply the rules in terms of when these amounts are incurred and when they're paid. I think to be consistent, it's probably gonna have to go to say an accrual basis, where it's based on the amounts incurred during the 8 weeks. Otherwise, businesses that have more frequent payrolls would be able to claim more than businesses that do not. So look for guidance in the coming weeks, and I mean if they take a liberal ruling and say it's cash basis based on when the amount's paid, maybe at the end of the 8-week period you do a special payroll to make sure it gets in under the wire.
Let's see. How is the employer credited for the 50% employee retention credit? Are there limitations?
You can apply to the IRS for an advanced credit. So it's they would make a payment to the company based on the estimate of the advanced credit. It's going to be tracked through the quarterly employer return, the quarterly Form 9041 payroll tax returns. So it's much like the advanced earned income credit. You put in for it early and then receive the funds separately from the time that you actually file the returns.
Let's see. Karen writes, I missed the first half. Is payroll an allowable expense including Social Security and Medicare employer tax portions?
Just the employee portion. Gross wages does not include the employer portion of FICA or FUTA taxes, but you can include the state unemployment taxes and any other local taxes that you may have in your jurisdiction.
In the rules for forgiveness for the PPP monies, it says that federal taxes are not forgiven. Are federal taxes the employer's match Social Security and Medicare expenses, or does it include the employee's withholdings as well? I'm not pre-reading these, and so it's in the same vein as the last question.
Yeah, the early guidance indicated that the employee portion of federal withholding was not included. And then the SBA came back in later guidance and said, no, we only intended to exclude the FICA, the employer portion of FICA, just the FICA matching, and the employer portion of FUTA. So the employee portion of FICA and federal taxes are included as gross income. They're not excluded as they originally were. And I know there was a lot of confusion, a lot of banks that were requiring the applicants to remove the employee portion from the application, and unfortunately, a number of them got processed that way, so that the later guidance that came out was weren't able to be applied to those previous returns, and the SBA is not accepting additional applications for that difference in amount.
If we incur expenses paid on a credit card for vehicle gas, can we use the loan to pay the credit card only for the amount charged for gas? Also, auto payment for phone and internet is on credit cards. So can we use the loan amount to pay those items on the credit card bill?
Yes. Yes. Charges on a credit card are treated just the same way as writing a check. You just want to be careful that you don't use the PPP funds to pay the full amount of the credit card. You only want to pay that portion that related to the allowable expenses. And again, document what you're doing.
Greg asks, do we need to count part-time employees that have fewer than 30 hours?
Yes. Yes. You aggregate the hours of those people and then divide by 30 to determine the full-time equivalents. So if you have 3 employees that are working 20 hours a week, they actually calculate out to be 2 full-time equivalents, right? Because there's 3 employees at 20 hours is 60 hours. You divide by 30, and that's 2 full-time equivalents.
Okay. Are COVID hours to be included with PPP-funded payroll?
No, they cannot be included. You get a separate tax credit at the end of the year for amounts paid for the COVID leave, the COVID mandated leave.
Okay. Are eligible expenses paid out during the 2-month period? Example, March paid electricity. I'm trying to read through this. So I think the question is, I paid my February power bill in March. Is that eligible under the rules?
Yeah, we just don't know go without additional guidance. I mean, I'm taking the stand. I'm tracking those expenses because they were paid within the 8-week period, even though they related to an earlier period. And I'm looking for guidance to come out probably in the next couple of weeks on how that would be treated. So, track it, and then when the additional guidance comes out, you may need to adjust it or may not. Hopefully.
That's a case of expense incurred versus expense paid.
Right.
And where does it fall? Let's see. How soon do we need to bring the head count up to the previous count?
By June 30th. June 30th is the cutoff date for the headcount rule. And it's compared to the February 15th date. So if that's the safe harbor, if you bring the head count up to the February 15th rate by June 30th, then you've met the requirement.
Do we need to keep record of the $10,000 grant use since it is often received before the PPP loan is funded?
That's a good question, because there were no real guidelines over the use of the 10,000. It's really intended to be for working capital. However, it's going to be applied against the PPP funds. So my interpretation would be that no, you don't have to document that 10,000, but understand that it's going to be applied against the PPP loan amount.
Okay. Let's see. For a portion of the loan received that is not needed, can I pay it back so as not to impact my forgiveness percentages?
Well, there's no current vehicle for paying that back. At least not to my knowledge. It's a good question for the bank, but in terms of the actual administration of the PPP loan from the SBA, there's not a vehicle for making that type of payback at this point. And until there's further guidance come out, I would just keep it segregated in your account, and at the end of the forgiveness period, when we know more about how that's going to be calculated, then you can make decisions on how those funds what you do with those funds at that point.
Okay. I'm going to let our participants know that we are about 5 minutes away from a hard stop where we have to end the webinar. And we still have so many questions open that we're not going to be able to get to. We want to grab a hold of those questions that mean the most to the most people. So there is upvoting enabled on those questions. So if you go through and read the questions really quick and click the thumbs up, we'll be able to respond to those questions that have the most thumbs up right now. And that will help us answer the most pertinent questions for this audience right now. So let's see. Would business insurance be classified as a utility?
No, unfortunately not.
Could I give my employees a few free hours as a bonus? Would this payroll amount be forgiven under the PPP loan?
Yes, but bonus amounts count. Now, the SBA is going to be looking at who those amounts are paid to. So if you're paying yourself a bonus as the owner, it's going to be scrutinized. But payments to employees, in terms of bonuses or commissions, are going to qualify. I mean, that was the intent, is to boost the income of employees who were impacted by the staff reductions.
Are COVID expenses, thermometers, masks, etc., something that can be accounted for in the 25%?
I don't believe so. I mean, they're not utilities, and I haven't seen anything in the guidelines that would indicate that they would be.
Let's see. I'm just now trying to get a PPP loan as a sole proprietor with 2 employees. Scared that this is the right move. As the owner, I get draws or disbursements, and full-time employees, half-time bookkeeper. I pay myself my taxable income monthly, plus employees. And boy, I'm having a hard time making out the full question. Well, basically trying to decide whether to apply for a loan, and it looks like he's questioning how to factor himself in, considering he has a half-time bookkeeper. Could I pay myself my taxable income monthly?
Well, nothing says you have to apply for the full amount that the calculation comes out to, particularly for self-employed. Although there's some different rules, and like I say, I see some new rules in terms of self-employment that would allow the business owner to count the wages during the 8-week period based on wages from the past year, from the calculation period. So factoring in, you don't have to apply for the maximum amount. You can apply for a lesser amount in anticipation of the amount that you use. Plus, you have some different rules in terms of self-employment as to how the amounts are spent.
Okay. Can employee health benefits be covered with a PPP loan even though they are on unemployment? Will it be forgiven?
Yes. Yes, health benefits. I mean, that's the intent, was to maintain not only payroll but health benefits for employees while they're off. So yes, the health benefits will certainly count toward the forgiveness piece.
What are the chances that businesses deemed essential and able to remain operational will have forgiveness limited?
I don't know that. There's obviously there was a lot of press about some of the bigger companies that took the PPP loan amounts and now are backing away from it. I mean, there are certainly a number of businesses that continue to operate at didn't see a decline in their business during the shelter in place rules, and some even saw greater amounts of business. So for those businesses applied, I mean, obviously it wasn't the intent for these funds to be used for those businesses, but I don't know at the end of the day what will happen to those. And who's to say that a month from now those businesses might be negatively impacted as well?
Okay. Terry Frisk, B2B CFO, excuse me, B2B CFO. This is your second go round with us for a webinar. And once again, we have gone the full hour. We're at the top of the hour. Our time has expired. We still have more questions to those that have asked questions and we haven't been able to answer. We are truly sorry that we're not able to get to them. We are limited by time. I will tell you this. Terry has given us some terrific information. We have a number of webinars already on SBA where some of these questions have been answered. I encourage you to go back and watch those. Be watching for future webinars. We will come back to this topic in the very near future. Tomorrow's webinar that starts at 2 o'clock Mountain Time is about how to reopen your business. Terry touched on that. We're going to get into specifics from a communication standpoint and from a health standpoint as well, and how to set your business up for success. All of this to say, be sure and watch our page for the latest resources and check that SBA website that will be updated. It looks like it's being updated continually with the latest on rule interpretations. With that, this has been a production of Better Business Bureau, building trust in trying times. Thank you so much for spending this time with us. We truly hope it has been helpful to you and your business.